A new report from the World Gold Council claims that gold's latest bull run has come too fast, but gold still has room for growth. Now, according to the WGC, the combination of high uncertainty, easy monetary policy, very low interest rates, positive price momentum, the depreciation of the U.S. dollar, and fears of higher inflation fueled record flows of 734 tons into gold-backed ETFs in the first half of this year. Now, meanwhile, the U.S. dollar has started to rebound from a multi-year support level. Simultaneously, the prices of both Bitcoin and gold have dropped off. So joining us now to discuss our Boom Bust co-host and crypto analyst Ben Swan and CEO of Euro Pacific Capital, Peter Schiff. Thank you both for being here. Now, Peter, I want to start with you. What do you make of this WGC report, and where is gold headed?
Well, first of all, gold's headed a lot higher. I agree with the report in that the price of gold is going to go up. I think the World Gold Council is actually underestimating just how high the price is going to rise, because I think they're also underestimating how much inflation global central banks are going to create, in particular the Federal Reserve, and how much value the U.S. dollar is going to lose against other fiat currencies, but in particular against real money, which is gold.
And I got a question. I guess I have to ask you this, Peter. You have often been here, you touting the popularity of gold, why you should invest in it. Is there ever a time where you feel like it's not the right investment?
Well, first of all, I don't even look at gold bullion as an investment. I look at it as a store of value, as an alternative to cash. So I think it's always makes sense to have some cash, right? I mean, especially if you think assets are expensive, if you think stocks are overpriced, if you think real estate is overpriced, and you don't want to buy now, you want to buy later. How are you going to store that purchasing power? I think storing it in gold historically is much better than just relying on a piece of paper. Even the best fiat currencies have a poor track record relative to gold. So if you understand what gold is, then you should always have some. But right now, I think it's particularly important, given how much money the central banks are printing, particularly the Fed. I think gold is going to make a bigger rise against these fiat currencies. But as an investment, I think that investors should be in gold mining stocks. I think Warren Buffett had it right by buying Barrick Gold, which I own myself and I've owned for a long time. But there's a lot of other gold stocks that I think are particularly good investments right now, given how much value I think gold is going to gain in the months and years ahead.
Sometimes you have to go to square one. I just had to cover that quick. Ben, now since the dollar increased from its monthly open on September 1st, the price of Bitcoin declined from 12,086 to 11,160. Now, gold has seen a similar response, declining by nearly 1.8% in the past 2 days. Is strengthening dollar going to end Bitcoin's current surge?
No. First of all, I think that especially when we're looking at what Peter just said about inflation, what these numbers don't take into account is, remember, the Fed Reserve Chairman Jerome Powell just came out a few weeks ago and talked about, altering and changing the Fed's stance on inflation and letting it run moderately above 2%. All of that lends itself into both Bitcoin and gold, which essentially are acting in different ways, but both as a store of value assets. Now, listen, we can disagree about which one's better and which one you should go into, but here's what I know. I know there are a lot of companies right now that are starting to move some of their money over into cryptocurrencies and Bitcoin because they're afraid of what the Fed is doing to the dollar. So listen, this is a long-term gain, and if we're talking about long-term gains, the Fed is not winning a long-term game. They continue to print money, devalue the currency, and continue to essentially run the American currency into the ground.
I think it's fair to say that you both agree that fiat currency is not the way to go, or I mean, as far as holding the store of value there. But Peter, what do you make of what Ben just said there?
Well, I mean, first of all, I agree with him that I don't think it matters what the dollar does ultimately to Bitcoin, whether the dollar is strengthening or weakening against other fiat currencies. I think ultimately Bitcoin is going to collapse underneath its own weight. I just don't think Bitcoin is a viable alternative to gold. I don't think it's a store of value. I agree that there are some people who mistakenly believe that it is, and so they may buy it. I think Ben is overstating how much institutional money is actually moving in to Bitcoin. I think it's a tiny amount. I think that to the extent that institutions, pensions, and endowments are going to be correctly worried about inflation and a weak dollar, they are far more likely to go to gold than to Bitcoin. And so I just would stay out of it. I mean, you could trade it, but I think if you're going to trade the mining stocks, I think you got a lot more upside potential there if you're a gambler, and I think there's less downside risk.
Now, Ben, Bitcoin did fall on Wednesday by 4%, but it defended the long-held support zone of 11,100, 11,200-ish. Are we going to see an even larger pullback over the next few days?
Well, we could see that, but I don't think we're going to drop well below that $11,000 mark. But just kind of going back to what Peter's saying there, look, I think there's a lot of disagreement over whether or not Bitcoin truly is a store of value and institutional money. But there is so much technology being built around blockchain right now and consequently attaching itself to Bitcoin and cryptocurrencies. I think that you can't ignore the fact that there is an enormous technological value and technological assets being built around Bitcoin right now. And it's been that way for several years. So when people do look at the way that Bitcoin fell off at the end of 2017 going into 2018 and say, oh, look, it's going to fall all the way back to $3,000 again, I don't think that that's going to happen based upon the fact that the technological space around Bitcoin is very different today than it was a couple years ago.
Peter, go ahead.
Yeah, well, that may all turn out to be malinvestment that was a consequence or byproduct of the bubble. And to the extent that that technology has value, it doesn't necessarily mean that Bitcoin itself has that value. I think it's just a speculative, digital token.
Peter Schiff of Euro Pacific Capital and Ben Swan, Boom Bust co-host and crypto analyst, thank you both for your time.